A classification hearing is an annual public hearing in which the Select Board, Town Council, or City Council conduct a hearing for the purposes of deciding amongst and voting on specific property tax allocation options. The assessors have four responsibilities with regard to the classification hearing. They need to identify when the hearing must be held, have a list of tax options available to be decided at the hearing, know the full role of the Board of Assessors in the hearing process, and be familiar with the resources available to prepare for the hearing. Within the limits established by state law, as calculated by the Department of Revenue, or DOR, the Select Board, Town Council, or City Council annually decides the percentage of the tax levy that will be paid by each class of real and personal property owners. The assessors notify the Select Board or City Council when the final valuations have been completed. Community officials must then schedule a public hearing for classification purposes and post a public notice of the meeting. The minimum time required between the publication of the hearing notice and the public hearing is 48 hours. There must be a public notice posted of where and when the classification hearing will take place. While some communities only need a brief session, others may schedule 2 or 3 special sessions. It depends on the complexity of the options to be decided in the community. Taxpayers may present their views in a manner provided by the body holding the classification hearing. If a scheduled hearing has started and initial discussions have begun, and then further delayed, it can be tabled and the voting can be delayed until the tax allocation discussion can be completed. A new posting is required when a meeting is continued or rescheduled. However, the newspaper article information required by DOR guidelines does not necessarily need to be republished. All of these options affect the allocation of the tax burden. None of the options affect the total amount paid in taxes, but rather what portion of the total amount of taxes a particular property class pays. An example is, with a single tax rate, without any discounts or exemptions, each class and every parcel has a tax burden that is the same proportion as its assessment. If the residential class equals 70% of the assessed value in the community, it will carry 70% of the tax burden. With a split tax rate, the tax burden shifts and the residential class might carry less than 70% of the tax burden, and the commercial, industrial, and personal property classes could pay more. The role of the Select Board, Town Council, or City Council is to conduct the hearing and vote on the tax allocation options. The role of the assessors is to provide all relevant information to the Select Board, Town Council, or City Council so it can make informed decisions. This includes the financial impact on the taxes of different taxpayers. Cities and towns have several options in distributing the tax levy among taxpayers under property tax classification. All of these options affect the allocation of the tax burden. But remember, they can change the amount of the tax levy being paid by each property class. But the total tax levy remains the same. There are 4 options that are considered at the classification hearing. The first option is, should there be a single tax rate or split tax rate? In other words, should there be one tax rate for the residential and open space classes and a different tax rate for the commercial, industrial, and personal property classes? The second option is, should a discount be given to the parcels within the open space class? The third option is, should a partial tax exemption be given to all qualifying owner-occupied residential properties? Finally, the fourth option is, should a partial tax exemption be given to all qualifying small commercial properties? There are many considerations that can influence the decisions made at the classification hearing. These include the relative size of the various property classes, the nature of the businesses, the industries currently in the community, and the number of single-family homes. The tax allocation decisions do not have to be voted at the classification hearing. The decisions can be voted at another properly scheduled and posted meeting of the body. Let's take a closer look at the tax allocation options that are considered at the classification hearing. The first option considered is the choice between a single tax rate or a split tax rate. If a single tax rate is adopted, then all classifications share the same burden equally. When considering a split tax rate, the next decision is how much of the tax burden to shift from the residential and open space classes to the commercial, industrial, and personal property classes. There's a limit to how much of the tax burden can be shifted. To decide the percentage of the tax levy that each class of real and personal property will pay, a minimum residential factor, or MRF, calculated by the Department of Revenue, is used to ensure that the shift taken by a city or town does not exceed the maximum shift allowed by law. The adopted residential factor to shift cannot be less than the minimum residential factor, or MRF, calculated by the DOR. You can reference your community's minimum residential factor, or MRF, through Gateway by first entering the LA4 assessments by class on the LA4 Assessment Classification Report. Once the assessed values are finalized and properly classified, you can print the MRF report by accessing the LA7 in the Tax Rate tab on Gateway. Computations of how the MRF formula is calculated is displayed on this report. The residential factor adopted by the community cannot be less than the minimum residential factor, or MRF, as calculated by the DOR. The residential factor governs the percentage of the tax levy to be paid by the residential and open space properties, as long as the residential and open space classes raise at least 65% of their assessed value percentage. The difference is then shifted to the commercial, the industrial, and personal property, or CIP classes. With a split tax rate, the commercial, industrial, and personal property, or CIP classes, cannot pay more than 150% of the assessed value percentage, as long as the residential and open space classes pay at least 65% of the total tax levy. Whether a community can shift to the maximum allowed depends on the change in its residential and open space, or RO, share of the levy from the previous year, and also on the lowest RO levy share ever chosen. The minimum residential factor, or MRF, for most Massachusetts communities does not come close to this shift limit because of the distribution of their property values among the classes. However, there are a few communities that have an extraordinary proportion of their value in the commercial, industrial, and personal property, or CIP classes, and can't shift as much because the residential and open space, or RO, levy share would drop below the minimum share allowed by state law. The residential factor is the basic tool for determining how much a municipality can shift the tax burden if the Select Board, Town Council, or City Council has voted for a split tax rate. Let's take a look at a simple example of how the residential factor is calculated. If the residential and open space, or RO classes, are 80% of the entire assessed value of the town, then the commercial, industrial, and personal property, or CIP classes, are 20% of the entire assessed value of the town. With a single tax rate, the RO classes would pay 80% of the entire tax levy, and the CIP classes would pay 20% of the entire tax levy. However, in this example, the Town Select Board have voted for a split tax rate and also decided on the maximum allowable shift of 50% to the CIP classes. Let's look at how the 50% shift impacts how much of the total tax levy the CIP will pay. With a single tax rate, the RO classes would have paid 80% of the entire tax levy, and the CIP classes would have paid 20% of the entire tax levy. In accordance with the decision made by the Town Select Board, there is a 50% shift of the current CIP classes tax burden of 20%. That is, a 50% increase in the current CIP burden. So, 20%, in this equation, the 20% is represented by 0.2, multiplied by 50%, in this equation, the 50% is represented by 0.5, equals 0.10, or a 10% increase. Therefore, the new tax burden for the CIP tax classes is their levy share under a single tax rate, 20% plus the 50% shift of a 10% increase, for a new total of 30% for the CIP classes. If the CIP classes will pay 30% of the total tax levy, then the residential and open space, or RO classes, will pay 70% of the total tax levy. This is calculated by subtracting the CIP share of the tax burden from the total tax levy of 100%. 100% minus 30% equals 70%. To determine the residential factor, divide the new residential and open space, or RO tax levy share of 70% by the original RO tax levy share of 80%. 70% divided by 80% equals 87.5%. The residential factor in this example is 0.875. Under two circumstances, the parameters for calculating the minimum residential factor, or MRF, are expanded. The first is when adopting the MRF determined by using the basic parameters, demonstrated in the previous example, would result in residential taxpayers paying a higher share of the tax levy than they paid last year. The second is where the MRF would result in residential taxpayers paying a higher share of the tax levy than they paid in the fiscal year before the fiscal year the city or town first adopted the MRF to shift its tax levy. The expanded parameters are: CIP taxpayers cannot pay more than 175% of their full and fair cash value share of the tax levy. RO taxpayers must pay the greater of 1. 50% of their full and fair cash value share of the levy, or 2. the lowest percentage share of the tax levy they have paid since classification began. The second tax allocation option facing the classification hearing is the open space discount. If a community has parcels classified as open space, the Select Board, Town Council, or City Council can decide to allow those parcels a discount on their taxes. The open space discount can be up to 25% of the open space tax levy. The discounted taxes are shifted to the residential class. The total tax levy for the residential and open space, or RO classes, does not change. This results in different tax rates for the open space class and the residential class. The open space discount is rarely used. The third option is to decide whether to offer a residential exemption. This option provides an exemption in value for all eligible residential property owners. Only owner-occupied property owners are eligible. This excludes properties such as apartment buildings, seasonal homes, and vacant land owners. The exemption cannot be more than 35% of the average of all residential property values. It is calculated by finding the average residential values and computing the chosen percentage of that average. The calculated amount of value is then exempted from taxation for each eligible owner-occupied property. The residential exemption results in a reduction of the taxable value of all eligible properties. The residential exemption produces a shift in the tax levy share within the residential class. The reduction in taxes created by the exempted value is shifted from the eligible residential parcels to the ineligible residential parcels. The residential exemption does not change the residential tax levy share. The exempted value lowers the total taxable value of the residential class and therefore raises the residential tax rate. As an example, a community decides to implement the residential exemption. The chosen percentage of the average residential assessment is calculated and results in a $40,000 exemption. The current tax rate is $15 per thousand. The exemption would amount to $600 in tax dollars. The loss in taxes created by the exemption would then be shifted to all the ineligible residential property owners and onto the higher valued properties by raising the residential tax rate. The increase in the residential tax rate often offsets the exempted amounts for the higher valued properties. In other words, the increase in the tax rate generates an increase in tax dollars for the higher valued properties that exceeds the amount of the exemption. It is important for assessors to identify all the residential parcels that are eligible for the residential exemption before the classification hearing. The fourth and final option decided at the classification hearing is the adoption of the small commercial exemption. In a city, the mayor, with the approval of the city council, and in a town, the town council or select board, may exempt up to 10% of the value of the commercial class properties occupied by qualifying small businesses. The assessors apply the exemption to reduce the taxable value of the eligible properties before setting the tax rate, in the same manner as the residential exemption option. Like the residential exemption, the small commercial exemption is a value exemption. It lowers the taxable value of the qualifying properties. This business-friendly exemption results in lower taxes on parcels occupied by small business owners and shifts those taxes to other commercial and industrial taxpayers. In order to qualify for the small commercial exemption, a property must meet the following criteria. First, must be a commercial class property, not an industrial class property. Second, must be a business with an average annual employment of 10 or less individuals at all locations during the prior year. Third, assessors may determine annual employment numbers for sole proprietorship, but for all other businesses, the assessors must rely solely on the determination made by the Director of Labor and Workplace Development. And 4, the parcel has an assessed value of $1 million or less before the application for the exemption is applied. Let's review what we have learned from this lesson. A classification hearing is an annual public hearing conducted by the Select Board, Town Council, or City Council to consider and possibly vote on specific property tax allocation options. There must be a public notice posted of where and when the classification hearing will take place. The notice must also be published in a widely distributed newspaper in the community. The tax allocation options affect the tax burden of the property classes, but not the total tax levy. When considering a split tax rate, the residential factor adopted by the community cannot be less than the DOR's minimum residential factor, or MRF. The other tax allocation options are open space discount, residential exemption, and small commercial exemption.